Good morning from London. I'm Anna Edwards alongside Guy Johnson and Lizzy Burden. We're an hour away from the opening trade. Here's what you need to know. Donald Trump says Ukraine can win back all of its territory and NATO countries should shoot down Russian jets if they violate their airspace. But the president continues to emphasise the role Europe needs to play. Federal Reserve Chair Jay Powell reiterates there is no risk-free path for the Fed, while Governor Michal says the central bank is in danger of falling behind the curve and must act decisively. Plus, Super Typhoon Ragasa makes landfall in Hong Kong after causing flooding in Taiwan that killed 14 people.
So a careful Chair Powell, reluctant to encourage this stock rally yesterday. Wall Street retreating in response yesterday, and European futures are catching up with that pessimism this morning, Anna. We have Wall Street futures pointing a touch higher now, euro dollar at 118, and oil holding on to its biggest gain of the week as Trump ramps up his rhetoric against Russia. The countdown to the opening trade starts right now.
The Russian economy is terrible right now. As you know, it's crashing. And that, frankly, Ukraine is doing a very good job of stopping this very large army. It's pretty amazing.
Keep an eye on defence stocks this morning. That would be my suggestion. You look at what is happening overnight coming out of UNGA, the news from Trump, the news from Zelensky. There's more of it coming today. Trump suggesting maybe that actually NATO should shoot down Russian jets if they enter the airspace. We've already seen drones being shot down. Are Russian jets the next step? And what comes after that? Plus, also talking about the fact that maybe Ukraine can actually take territory here. This is all good news for defence stocks, but you wonder what kind of a world we're entering now as Trump maybe doubles down on this narrative.
Yeah, continuing to emphasise, as he's done in the past, the role that Europe needs to play, the role, the stepping up that Europe needs to continue to do when it comes to defence spending. And it was a wide-ranging speech, of course, from President Trump, but just homing in on a lot of the things he had to say about Ukraine, and you saw some of that coming after the speech. And when quizzed by journalists, to your point, Guy, he was specifically asked, should NATO countries down jets if they fly into their airspace, and he said, yes, I do, in agreement with that statement. But then asked if there would be US assistance, he was a little bit more cautious in his language, saying it would very much depend on the circumstances. And Marco Rubio saying, for his part, nobody's talking about downing any aircraft unless they're actually attacking. So you wonder, is this constructive ambiguity or just a bit of ambiguity? And maybe that's entirely for the good when it comes to dealing with Russia.
Yeah, it's all well and good, Donald Trump saying that Ukraine can take back all of that territory, but is he going to help? Is it just the EU that's going to have to help Ukraine here?
Okay.
It's all well and good seeing the defence stock rally in Asia. Is it going to carry on in Europe when you've got DAX futures not really showing it right now?
Yeah, I've been to see what Rheinmetall does this morning. I think it probably is called higher, so we'll see what the defence names do here in Europe. I don't know. This feels like a shift. Trump has played a more balanced role in his approach towards Russia and Ukraine. He now feels like he's erring on one side. He's now... The fact that the President of the United States is actively talking about shooting down Russian jets.
Yes.
I don't know. That feels like a moment to me.
And he says they have got a close relationship with NATO. He says we'll continue to supply weapons to NATO, but what NATO chooses to do with them is up to them, as if there is still a little bit of distance he's trying to put between the United States and NATO, whether that's realistic or not.
What happens if you shoot down a Russian jet?
That's exactly the question that Russia keeps testing the answer
Precisely.
to.
So are they looking for that to happen? And if it does happen, do you widen the war even beyond Ukraine? And this feels like quite a pivotal moment to me.
Ollie was giving us a nice example of a historical parallel with this, with Turkey some 10 years ago, where they shut down a Russian aircraft and then eventually had to apologise profusely. And, you know, I'm not sure all the detail was useful, but it certainly is a reminder that these things escalate quickly.
Wars happen by accident often.
Yeah. Whatever Trump's level of commitment is here, our sources have been telling us that Putin's encouraged that Trump hasn't been actually stepping up when all of these tests come ever since Alaska.
It just did, though.
By words.
OK, but this is the President of the United States suggesting that NATO could shoot down a Russian jet if it was to enter its territory.
But is he leaving a little ambiguity about the US's role?
Of course he is. Absolutely. No, without a shadow of a doubt. But this just feels like a step down a path that it is very hard to calibrate.
Yeah.
And we've already seen the effect that the Ukrainian war has had on Europe. what would a further escalation, a broadening of this conflict, which it looks like Putin is kind of pushing for in some ways, what would that actually look like? And I don't know, but I keep an eye on defence stocks this morning. Let's talk about what is happening in the tech space. I don't know which way to look this morning. It's either the defence story or it's on what is happening with what is happening with tech. The tech story didn't happen last night, okay? So Micron and Baba are both out with kind of numbers and statements. Micron's numbers were sensational. What Baba's talking about in terms of what it's saying with AI is very strong as well. But that's not the story. The story is that the shares didn't go down yesterday, in my mind, because look at Micron over the last month. Micron is up massively over the last month. It's up, in terms that's the Baba share price. That's just the overnight. I want to show you this chart here. So that's Micron over the last month. And as you can see, it's up by over 30%. Baba is up a similar amount, 40%, I think, over the last 30 days as well. These are massive jumps over the last 30 days that last night's numbers just confirmed.
Yeah. So you see, that's interesting. So you took that as a positive, which I can understand. On the other hand, you could say, look, they really beat on revenue, they really beat on EPS, they gave a really glowing guidance, and the stock was really whipsawed. Is that the confirmation that, but to your point, they didn't drop. And they've come a long way.
And it's hard to impress investors at the end of the day.
Tough crowd.
Once you've delivered that kind of share price performance over the last 30 days, Micron, one of the biggest chip stocks in the world, is up by that amount in the last 30 days. Baba's up by that amount in the last 30 days. Oracle is up by that. Are we entering the euphoria phase, I guess, is the real question here. And to your point, Anna, how much better do the numbers have to be to keep that on track?
Interesting that Cathy Wood has reopened her position in Baba. We had her on the show on Monday. She hasn't been in it since, was it 2021 when they had the regulatory crackdown? And here she is getting back into Chinese.
Yeah, I mean, Bloomberg Intelligence not overly impressed. Rob Lee, in one of his notes, saying doesn't seem all that convinced by what Alibaba is doing. So it's going to be more of a driver of sentiment than a driver of underlying profitability. But that comes down to all of the AI capex, doesn't it? It's driving a huge amount of sentiment right now and a lot of profit for investors. If they play it right, but what profit does it produce for the underlying businesses is a question. I was also taken by Markets Live quoting the Taiwan exports, and here's an interesting one. They've got a record in exports to the United States. Of course, a lot of that is TSMC chips, and they're up by 20% over the last couple of months, year on year, and this is strong and sustained demand for AI and high-performance computing coming out of Taiwan.
All right. Should we talk about Powell?
I thought Powell was really boring.
I mean,
I don't think he changed very much.
At the bottom of the agenda.
Bowman, I thought was interesting.
Yeah, Bowman was interesting. So Powell not wanting to go either way, really, not giving a strong signal on an October cut, but Bowman warning that the Fed risks falling behind the curve.
Yeah.
That's what Powell's going to be listening to. One, if he's thinking about his legacy, and two, when, yes, she didn't dissent the last time, but is she going to dissent the next time?
I wonder if Besant's listening as well. I mean, maybe that's the target audience. If this is an audition for Fed chair and he's running the recruitment process, then maybe that's who the intended audience is for that kind of commentary. It's quite in line with Stephen Myron, or at least leaning in that direction, isn't it? And that seems to be where that particular conversation is happening.
The labour market story is interesting. So the whisper number ahead of the next payroll number, which actually isn't that far away at the moment, is 30K. The survey number is 42. Is 30K enough to cement the idea that the labour market is weak? Is 42. People are talking about the standstill number being around 50, i.e. that's the level at which you don't see much movement in employment. But you get a 30K print. The market is, we're 9 days away, is softening that number. The whisper number is softer than the survey number. So maybe another weak non-farm payroll number confirms the idea that the Fed is going to have to go harder. Anyway, that's the topic we have to discuss with Thanos Papasalvas. He's going to be joining us very shortly. We're going to talk about FX. We're going to talk about what's happening in the bond market. ABP Invest CIO. Andrew Chilton, M&G Investments CIO for fixed income, is going to be joining us. Laurie Calvasina is over from the States. She's going to be joining us on RBC Capital Markets. She's the US equity strategy head. Get her take on the tech story. Talking of tech, Dom Rizzo is going to be joining us. T. Rowe Price, group portfolio manager. I focus very much on the tech story with him.
Plenty on the day book as well today. At 9 a.m. London time, we get German EFO numbers. Then at 3 p.m, we have US new home sales. And at 9:10 p.m, another bit of Fed speak. Mary Daly for you as well. But EFO really in focus. We had those PMIs yesterday, of course. German services compensating for the slump in France. So that overall you had strength in the Eurozone. The fastest rise in the composite number in, I think it was 15 months.
Yeah, and we are expecting a very small tick up in the current assessment and the expectation today. But no great moves over on the German data side.
Feels like we're in the kind of the pause before things get interesting in Germany, when the fiscal really kicks in.
Which might take time, as
which might take time, yeah.
People.
And that's the kind of bit that we don't really, that's hard to calibrate at the moment. What else do you need to know this Wednesday morning? Let's run you through all of the news that is out there. Tether Holdings is said to be in talks with investors to raise as much as $20 billion. Sources say the El Salvador-based crypto firm is seeking funds for a roughly 3% stake through a private placement that could value the issue of the world's largest stablecoin at around $500 billion, ranking it amongst the world's most valuable private companies. The Kiwis, New Zealand, have named Anna Breman as the new Reserve Bank governor, appointing a woman to the role for the first time. That's after the unexpected departure of predecessor Adrian Orr earlier this year. Breman, who currently is the first deputy governor of Sweden's Riksbank, will start a 5-year term on December the 1st. Acting governor Christian Hawksby will stay in the role until then, before departing the RBNZ. And Super Typhoon Ragasa has battered Hong Kong with torrential rain and 195 kilometre an hour winds. It could be the city's most powerful storm in 7 years and has already left a trail of destruction. Authorities in Taiwan say it killed 14 people Tuesday as it struck the islands. The Central Emergency Operations Centre says another 34 people were injured, with 124 people still reported missing.
Yeah, so people missing, and in Taiwan, as we said in the headlines, flooding causing death. In terms of what the impact is on Hong Kong, last year we saw Hong Kong ending the practice where they shut the stock exchange every time there was a typhoon, and so we don't see that anymore, which is a bit of a change. So the Hong Kong market, the Hang Seng, actually up by 1.1% this morning. I'm not sure it's related in any way to the typhoon, but certainly the tech themes we've been talking about could be having an impact.
Hotel bookings apparently up strongly.
Yes, was it the Mandarin Oriental that bankers were camped?
Everybody just piles in there.
What a place to take cover.
Yeah.
Coming up on the programme, we'll hear from the ECB's Piero Cipollone, who says that the European economy has been resilient. We will get more of that conversation. He's been speaking to Chrissy. Plus, we'll discuss defence stocks as NATO looks set to stand up to Russia with US backing. Up next, Michal Bowman says the Fed risks falling behind the curve. We'll hear from her and discuss her comments. If you have any questions, if you want to get involved in these conversations, IB plus BBTV, those are the functions to use on the Bloomberg terminal. This is Bloomberg.
The recent data, including the estimated payroll benchmark revisions, show that we are at serious risk of already being behind the curve in addressing these deteriorating labor market conditions. And should these conditions continue, I'm concerned that we will need to adjust policy at a faster pace and to a larger degree going forward.
That was the Fed's Michal Bowman, of course, talking about needing to move more quickly when it comes to Fed cuts. Let's bring in Bloomberg's Valerie Teitel, who was listening to Powell, but also, of course, listening to Bowman.
We've had a lot of Fed speak this week, Anna, but the clear thing is that Powell yesterday has really cemented himself right in the middle of these two birds. You got the hawks on one side, the doves on the other. But Powell yesterday really giving us no new news when it comes to the language he used, very similar to that of the press conference, and also using the same kind of language in a way of not giving the market any hopes that October cut is definitely on the cards in his mind. You have to start thinking, though, he's going to have to pick one of these camps eventually. Just how quickly will he make that decision? On the hawkish side, we've heard from Beth Hammack this week. She was warning the risk of the economy overheating if we cut too quickly. And then on the dovish side, Michal Bowman, as you heard just there, saying the Fed could be at serious risk of falling behind the curve and even talking about cutting at a quicker pace than anticipated if the labor market continues to weaken. But Jerome Powell squarely in the middle. His Q&A yesterday was a bit flavorful. He did give us some book recommendations. So that gives it kind of a flavor for how the Q&A went. But at the end of the Q&A, he did mention that equity markets look overvalued on some metrics, and that did lead to the S&P having some weakness into the close yesterday, falling around 0.5%, really just undoing the move of Monday. We're now trading flat on the week when it comes to S&P futures. However, regardless of where the equity market goes, gold continues to breach record highs. 3 straight days now that gold has breached new records. It's up 10% on the month, Guy, up over 2% just on the week.
Valerie, great stuff, yeah. Equity markets flatlining a little bit. Tech definitely up, gold definitely up. Let's talk about all of this. What do you think of the Fed? Should the Fed be cutting? Should the Fed be hiking? Thanos Papasavas, CIO and founder of ABP Invest, joining us around the table. What do you think of the Fed right now? Is the Fed making the right moves, cutting rates? Is this the right thing to do?
We don't agree. First of all, I think the Fed remains orthodox. I think Powell remains orthodox. Whoever replaces Powell remains orthodox. So there's no concern on the broader orthodoxy.
So you think somebody who replaces Powell remains orthodox?
Yes, we also believe. So all the contestants who are being placed seem to be orthodox. Even those who are calling for a rate cut, such as the 50 basis points originally, that's more of a political play positioning for their position to be voted in. So we're of the view that the Fed remains orthodox. Now, in terms of the latest move, not just the rate cut that we saw last week, but also the Jackson Hole comments, what disappointed us, if you like, is the fact that the Fed is reprioritizing putting employment ahead of inflation at a point when unemployment, yes, we saw some weakness in terms of the numbers. We saw it drifting a little bit higher to 4.3. But at the end of the day, it's quite low. The broader indications seem to be quite constructive with the resilient U.S. economy. Yields are very well contained. Corporates are providing revenue. So we're not seeing any imminent signs of weakness in the economy. And yet, inflationary trajectory is higher. So we did not agree with that.
The whisper number of the payroll number in nine days' time is 30K. Is that not labour market weakness?
It is a slowdown. It is a slowdown in terms of the labour market. But we think that at this point in time, the risk of inflationary pressures moving a little bit higher as corporates feel more comfortable to pass through the pressures into the consumer could be a concern. And therefore, I would have thought it would be best for the Fed to wait for a couple of more months in order to assess better towards year end, probably December.
And Thanos, where does that leave various assets? I'm thinking about the dollar here. I was looking at the Goldman Sachs research this morning. They see the dollar weakening. They say, they quote, less exceptional economic and market performance, no longer warranting high valuations. I mean, it seems pretty exceptional still in certain quarters, perhaps, the US performance. But with that orthodoxy at the Fed, do you see that the dollar continues to fall?
Hugely important point. Number one, we do not agree that this is a structural shift for the dollar lower. We don't believe that the US or the US exceptionalism is over. We don't believe this is a structural shift. We think that the dollar weakness was more tactical or an economic cycle. And therefore, we believe that, at least versus the major economies, the dollar is no longer expensive. So we have downgraded our view on the euro from positive back to neutral. We did that in the middle of July. Recently, we also downgraded sterling. So we don't see the dollar weakening versus the major economies. But we do see some further weakness against the emerging market economies, where the valuations are still different.
OK, so the rate cuts are not something that's going to continue to undermine the dollar, then? Will the dollar respond differently to rate cuts?
Exactly. We don't agree with the rate cuts that the market is pressing in. So we think that both the interest rate differentials and the economic differentials versus market expectations are more likely to favour the dollar than the euro. And also, potentially, the ECB could be more dovish than what the markets expect, given the inflation is very much a 50-50 case.
Can I dive into your downgrade of sterling there, Thanos? Yes. There's doubt over future BOE cuts. So is this partly your view because of your worries about the upcoming budget at the end of November?
I think we disagreed with both of the BOE's rate cuts in February and in August. We felt that the bank should be more prudent given the historic inflationary pressures that the UK has been facing as an economy, especially with the supply chains after Brexit and so on. So we did not agree with that. But the reason why we downgraded sterling, having been positive for over a year, is predominantly because of the dollar view, because of the economic differential, the US economy doing better and improving versus the UK. The UK is in a very difficult position.
But take the dollar out of it and look at the pound against the euro. Where could we get to at the end of November? Because that seems to be the moment that traders are focused on.
We are agnostic on the euro sterling. We were more positive on sterling versus the euro, but right now we're neutral on both. So no significant view in terms of the two. The underlying score is a little bit more favourable the euro than sterling, but nothing significant enough for us to have a clear currency view on that.
If the Fed's not going to cut, do I sell stocks?
Not necessarily. I don't think so. And here we're talking about which stocks. So in terms of
US stocks.
US stocks, the fundamentals are supportive.
Yep.
Market price behavior is supportive, politics is supportive, geopolitics is supportive. The only thing which is sort of expensive on the US stocks is valuation, which is quite expensive. But if the underlying fundamentals continue to be encouraging, why sell stocks? I mean, we prefer Europe, UK, Japan, China versus the US, but not absolute.
The question is because a lot of people are citing the fact that the Fed's going to cut for a reason to own stocks. We got to these super high valuations, but the next leg, which takes us to the next level, is basically the Fed cutting and the Fed cutting hard.
But if the Fed does not cut because the underlying economy is showing signs of resilience and potentially reacceleration, that'd be positive for the equity markets and global growth. So we are not negative on the US is expensive, and we prefer other areas to the US. Within the US, our preference is for healthcare.
Okay, and that's so. In terms of what has been rallying of late, I mean, AI of course gets a lot of our attention, but that's not your focus. Then, if you're buying US stocks at all, and you say you favour other parts of the world, but if you're buying US stocks, it's healthcare and not the sort of high beta tech names. I mean, that sounds pretty defensive, Thanos.
It does, because we tend to have a slightly more positive exposure in emerging markets, Japan, Europe, China, and so on. So the US part of that asset allocation is more defensive with healthcare. In April, we turned positive the Nasdaq after that correction because valuations were attractive. But now it is quite expensive from a valuation point of view, and hence we prefer healthcare, cognizant that Trump could potentially create a little bit more volatility as we're approaching the end of September.
There's quite a lot of political risk in that sector, as we've seen demonstrated just this week.
Correct. And that's where we entered in early August after that initial bout of weakness has taken place. But obviously there is some risk there, but there is also a slightly more defensive play.
So you like China. What about Chinese tech specifically? We've got Alibaba shares on a tear this morning.
We don't look at the individual equity names, but we've liked China, which is benefiting from that sector, as is South Korea. So we do like emerging market in China. But one thing about China, which I thought is very interesting, what hit us basically a couple of weeks ago, is that the PBOC is in no rush to be cutting interest rates. The PBOC does not want to fuel more sort of push into the equity markets, into the risk-seeking behavior, which was the pre-Xi Jinping way that the Chinese economy was going. So we are positive, but PBOC is more cautious.
How do I price in geopolitical risk in Europe? We started the show talking about the President of the United States advocating maybe that NATO shoot down Russian jets if they enter their airspace. How do you factor that into your thinking?
We look at geopolitics in a more constructive way. We believe that at the end of the day, there will be some negotiations at the very top level. We believe that we are going to avoid a crisis scenario both on the Russia-Ukraine, but also in the Middle East. And there's, if you like, we sort of focused on Witkoff and whether we've seen a sort of an erroneous strategy that he's been pushing both in the Middle East and in Russia-Ukraine. But we are not particularly concerned of this elevating and getting out of control, adversely impacting markets.
So when you say geopolitics is supportive, which is one of the things you listed earlier, Thanos, is that just that geopolitics isn't overly getting in the way of earnings and market sentiment? Is that the crude reality?
Exactly. And we also tend to look at geopolitics in a relative rather than an absolute fashion. Of course, from an absolute point of view, there's a geopolitical risk. But from a relative point of view, we tend to say, OK, so what is the broader consensus in terms of geopolitics? And are we as concerned as the market, as the broader participants in that?
OK. Thanos Papasavvas, thank you so much for being with us around the desk this morning, CIO and founder of ABP Invest. We're just looking at the market reaction to that geopolitical news overnight. Not seeing it so much when it comes to DAX futures. They're still down 0.2%, but is that going to change at the open? Keep an eye on the likes of Klein Metal. We're coming up on the programme. ECB Executive Board member Piero Cipollone doesn't see major threats to inflation, and he says that rates are well positioned. We're going to discuss that and more with Andrew Chalton, fixed income CIO at M&G Investments. That's coming up next. This is Bloomberg.
Wednesday the 24th, good morning. 30 minutes to the start of European equity market trading. This is what futures are pointing to first thing this morning. Looks a little flat. Within that, though, there's going to be interesting trades to watch out for. Keep an eye on the tech space this morning. Definitely keep an eye on what is happening with the defence space as well. At the moment, we're indicated a little lower I think the segmentation of this market this morning could be quite interesting, Lizzie.
In new European bond space, you've got yields lower across the continent, across the curve, but not by much. We're waiting for that EFO data out of Germany, of course, and that, Anna, is going to be important for the ECB as well.
Yeah, absolutely. Thinking about the ECB, the European Central Bank Executive Board member Piero Cipollone says inflation expectations are well anchored and the central bank is in a strong position. Speaking exclusively with Bloomberg's Kriti Gupta, he adds the ECB stands ready to act in any direction and with whatever is needed.
If we look at the activity, we saw that the European economy has been surprisingly resilient despite all the uncertainty and the tension. We are doing pretty well. The ECB just released the latest forecast, and we revised for the first time in a long time the growth forecast for this year. We went from 0.9 to 1.2, so for the first time we revised up. And the latest number we are seeing looks good. I mean, probably the economy is doing well. I mean, we might have a slow, some reduction in growth for the third quarter, but then the pattern will be resumed. And we expect that the growth will be in a good place also in the coming years because it's predicated on good fundamentals like a resilient labor market, solid financial condition for households and firms. So, looks good.
You're feeling confident for now?
Well, uncertainty is still there.
Well, walk us through those uncertainty. Kind of walk us through the risks and how that ripples out in terms of the economy. Are we talking about upside risks in terms of inflation or going in the other direction?
Well, we think that the risk on inflation are very balanced. And we are in a good place. I mean, we are right on target. We will be close to target for the next 2 years. Inflation expectations are well anchored, so we are in a good place in terms of inflation. Again, the risks are balanced. Obviously, you could have some major geopolitical event, oil spikes, everything can happen, and this can, lead the inflation both direction. Also, obviously, trade tension can explode again, and this will increase the uncertainty. So. But overall, we think that we are in a position that we can manage the incoming events, and we are ready to react whatever is needed in any direction. Overall, as I said, the balance of risk for the growth seems to be more balanced today than a few months ago.
The ECB's Piero Cipollone there. We're joined now by Andy Chilton, fixed income CIO at M&G Investments. Andy, nice to have you on the programme this morning. Let's start with European government bonds then, before no doubt going to other geographies. So no worry around inflation, it seems, according to Cipollone, and that's certainly where the data has been of late. So what looks tempting about the European government bond markets? What looks like a risk worth taking?
So I think the ECB's, listen to that tape, is in an enviable position that risks are balanced. Elsewhere in the world, you'd say that inflation is somewhat stubborn. So they're probably in a decent position. I think the interesting thing that we see in Europe at the moment is the dispersion between European government bonds. You always look on the WB screen on Bloomberg. You've always been able to see that differentiation between the different credits. So a 10-year France trades at a different level to 10-year Germany. I think things have got a little bit hectic with the recent volatility that we're now seeing French government bonds trading wider than some of their corporates, which seems, I would expect to be a temporary issue. We were just saying before that, when you start learning your economics, it's cash is your least risky investment, and then government bonds should be the next one up, but it feels like that's got a little bit back to front. And I think as much as there's some political turmoil, as much as there's concerns over fiscal spending around the world, I think we need to remind ourselves that governments have levers that they can pull that others don't. They can effectively increase the price, taxes, and reduce the services. And used to live in California when they did exactly that. They furloughed the employees, they increased the taxes, they shut the beaches. They have levers that no corporate can ever pull.
OK, don't shut the beaches in France. some kind of chaos would ensue, not least amongst the tourists. So does that make France a buying opportunity, then, from what you've been saying there?
I mean, we quite like it. It's not to say the volatility won't persist short-term, but I think generally we favour government bonds over credit at the moment. Credit is, however you look at it, you can make arguments between one geography versus another, investment grade versus high yield. But every metric you look at, every possible credit category looks very much at the tighter end of any historical spread argument, and it feels that there is lots of uncertainty in the world. We talk about trade, and we haven't really seen the impact of the tariffs come through yet. Yes, there's a big AI investment boom, but there's an awful lot of good news priced into credit spreads and an awful lot of uncertainty, I'd argue, priced into governments, particularly in certain geographies.
Well, what about Britain? We had this 30-year gilt auction yesterday, lowest total orders since 2022, but still more than 3 times oversubscribed. What does that say to you about sentiment heading into the November budget? How are you feeling about UK debt?
So I think the UK, similarly to France or the US or Germany, it's still got levers to pull that maybe not politically comfortable, but it can still do things to manage the situation. I think the long end's very different. The long end around the world, we're seeing a complete shift in demand dynamics. You know, I'm 50, I've never had a defined benefit pension scheme, and I don't think I ever will. And I think that's the issue there. There's not the natural demand that we used to have at the long end has largely evaporated, whether that's from institutional investors, and retail don't really look at that part of the curve. So you're seeing the DMO and other issuing authorities shift issuance lower, but they still want to get some long-term debt out there. So it's an interesting dynamic at the long end versus the short end, which is going to be a tricky one to play.
And what about this interview with PIMCO in the FT today? Betting a fall in UK inflation is going to let the BOE cut rates more than the market expects. Do you share that optimism?
I think it's a little bit optimistic. I was looking at some data. If you look, quite often the market is always fairly optimistic on rate cuts, and often the market disappoints, or the reality disappoints expectations. So, you know, we've seen it in the US the last 3 years. Each January we start with positive expectations, the Fed's going to cut rates, and each and every year we've been disappointed. I really think that if you're a central banker, you're walking a tightrope at the moment, because you've got this growth requirement and clearly need to do things to help there, and you can see it more explicitly in the US with the political pressure. But inflation's, for me, has to be the priority. It's a corrosive factor, inflation. If inflation gets out of control, if inflation doesn't get back under control, then I think you can kind of kiss goodbye to the growth ambitions and employment and things like that. So I think focus on inflation first and be more defensive. And I think the Western central banks, they're a bit slow to move post-COVID.
Yep.
And the human beings, I think they remember that mistake, and I think they'll be more reluctant to go early than otherwise they would.
The long end of the bond market's the problem over in the United States. It controls the mortgage markets. It's the bit the Fed can't control. Bruce Richards was sitting in that chair yesterday talking about the fact that he thinks QE is coming in the United States as governments, to your point, who have the power, one way or the other, look to control long-end rates.
QE is an interesting one. You can see why they'd want to use it, and it certainly gives the bond market, gives equity markets a bit of an adrenaline hit.
Yep.
You'd see valuations soar. Revenues would soar. For me, it'd be fantastic. But it builds in inefficiencies, and it completely skews the risk-reward. And eventually that payback comes. And we saw it in 22 when, you know, we went from that zero-rate environment with very...
Do you see it happening, though? Is it how big a risk... The conversation's out there now, and people are talking about... The US has this massive debt pile. Long-end rates are really what matter. The Fed can cut, great. Front-end rates come down, but how do you control the long end?
I think it's definitely, as you say, it's definitely in conversations. I think it feels like it's the last tool they want to use, and they'll think more carefully about doing it, because what they've experienced now is, yes, they've implemented QE, but they've also begun to unwind it, and so they've seen both sides of the coin.
Some sort of twist, maybe, in terms of...
Potentially, but you still have to... If you're manipulating the markets, because that's ultimately what it is, you do have to unwind it at some stage. And you've seen from the BOE, they've had to reduce their quantitative tightening from 100 to 70 because that has the return trade has an impact as well.
We'll leave it there.
I love how Operation Twist comes with a steering wheel. That's what central banks are doing. Yeah, I like that visual.
Yeah. Feels like
it's quite moving my arms too much.
quite big moves, though. Andy, great to see you. Thanks very much.
Thank you very much.
By to see us, Andy Chalkin, fixed income CIO at M&G Investments. Coming up, what are we going to be talking about? Defence stocks firmly in focus this morning. NATO looking to set up a stand with Russia. The US apparently a little bit of tacit backing coming from Trump yesterday. I'm talking about shooting Russian jets down over NATO territory. That's going to be an interesting next step. Anyway, defence stocks will be in focus as a result. Names like Rheinmetall on the radar. That's next. This is Bloomberg.
Most of you have seen the recent statement I put out a little while ago, and I'm glad you got it. But I feel that way. I really do feel that way. Let them get their land back. Yep. So we'll see how it all works out.
Donald Trump there commenting on a social media post in which he stated his belief that Ukraine was positioned not only to fight back, but to reclaim all the territory taken by Russia. He was with the French President Emmanuel Macron on the sidelines of the UN General Assembly when he eventually made it in. But the US President also saying that NATO should shoot down Russian aircraft violating their airspace. Latvia's President echoed this, saying that the West should respond to Russia to prevent future airspace incursions.
President Trump and other leaders who have expressed their views on this issue are right. If Russian aircrafts keep flying, keep violating our airspace, NATO's airspace, then the only way how to stop them is to show force.
Let's bring in our Europe correspondent, Oliver Crook. Ollie, we've had this change in rhetoric from President Trump here, talking about fighting back, talking about Ukraine winning. Is it all talk?
Well, I mean, I think that's the big question for certainly the Ukrainians and the Europeans who are observing from some distance. That being said, Lizzie, I don't think we can sort of underestimate and undersell the difference that we have between the two presidents sitting in those chairs in the same configuration 7 months ago versus what we saw yesterday with Zelensky and Trump, where you had that catastrophic Oval Office visit, and now you have Trump very openly talking about support of Ukraine. And during that period of time, the last 7 months, you know, Trump had called Zelensky a dictator, had really called into question basically all of their defensive efforts and basically having any support for the president of Ukraine. And that is a very different story than we got from Donald Trump yesterday. He went sort of more explicitly into some of the details of what he would like to see, what he thought is possible for the Ukrainians in a Truth Social post, saying that after he got to fully understand the Ukrainian and Russian military and economic situation, he thinks that Ukraine, with the support of the European Union, and this is key because the United States does not want to pay for any of this, it will continue to provide arms and sell arms to the EU and to Ukraine, but do not want to furnish them. He thinks that the Ukrainians are now potentially in a position to regain all of their territory. And in fact, he went even further. He said that they could take back even further territory, i.e. implying, I guess, that they could take part of Russia. But when you get that sort of pronouncement in the Truth Social post, you begin to wonder if this is all 100% kind of his actual conviction, his opinion, and how much of this is trying to amp up the pressure on Vladimir Putin as sort of art of the deal, sort of part of the conversation, where on the one hand, yes, he's being more supportive of Ukraine, but on the other hand, I doubt he really wants Ukraine to take any part of Russia. That being said, there were also parts in that discussion between Zelensky and Trump in which basically Zelensky asked Trump to put more pressure on Viktor Orban, to ask him to stop buying fossil fuels from Russia, something that the EU has failed to do so far. And Trump said that he's open to doing that and having that conversation. So this is a significant shift. I think the question and the fear for many Europeans is that, you know, with Donald Trump, this may not be his sort of final stance on the position, but they will try to capitalize with the momentum while it's on their side.
You've also got some fairly strong comments coming through from Baltic leaders. You've also got some fairly strong comments coming through from the President of the United States relating to Russian incursion into European airspace. Just talk us through how, in particular, the Baltics are feeling about this and what kind of response we could see.
Yeah, so listen, you've got a lot of sort of a mixed bag from a number of different people talking about what the sort of reaction function should be to these incursions into NATO airspace by these Russian fighter jets, right? We had the comment from Donald Trump, I think, is the one that got most of the attention when he was asked by a reporter, should the European nations be shooting down, should NATO nations be shooting down Russian jets if they incur on the airspace? And Trump said very quickly, yes, I think that they should. Again, that is a sort of very off-the-hand comment that on something that is a very, very high consequence for many of these leaders. When I spoke to the Estonian Prime Minister yesterday, and again, I asked him a sort of hypothetical question, which isn't so hypothetical. What happens the next time you have 3 combat-armed aircraft coming into your airspace? What is the NATO response? Here's what he had to say about that.
The air capabilities are coming from NATO allies. Right now, Italian F-35s were there to intercept Russia. And also we have different systems on the ground to have different capabilities to answer any threat. Mm-hmm. So everything together comes from the NATO, and we're talking about air defense and different capabilities in that area.
And so he really wouldn't rise to say whether or not they would shoot Russian jets basically out of the sky. And of course, we can understand why. This is a nation of less than 2 million people that sits right on the border with Russia. They don't want to be the ones responsible necessarily for starting a full-out armed conflict. What I think is also interesting is we heard from the German defense minister, and I'll just read yesterday what he had to say. He said that slapdash demands to shoot something out of the sky or do some great show of strength helps less than anything else right now, and that basically this is part of Putin's calculation to basically continue to put pressure on NATO, then something happens, and then Russia can act as if it is aggrieved. So there are certainly some split opinions within Europe on how to react to this going forward.
Ollie, thanks very much. Bloomberg's Europe correspondent Oliver Crook with the latest coming through from the United Nations General Assembly, all the commentary on the sidelines around Ukraine, but also his interviews with European leaders on this really important subject about how NATO will respond. Let's pivot to the markets, though, work out where markets are heading through today's session and how they respond to all this latest news flow. Joining us now, our Markets Live executive editor, Mark Cudmore. So, Mark, markets managing to put, geopolitics to the sidelines to a large degree, and AI remains in focus. I suppose we have reason to go a leg higher with those Micron numbers. AI very much still in the driving seat.
I think so. There are a couple of themes going on. Of course, there's the Ukraine story. There's the looming threat of a shutdown in the US. But absolutely the main driver is AI at the moment. And I know a lot of markets have spent the last month or so wondering about whether AI is in a bubble or even for much longer. But as a common refrain of this segment is, if it is a bubble, you don't fight bubbles. That is the quickest way to lose your job in markets. If it's a bubble, you identify it, you ride the early stages. We may be beyond the early stages, but you wait for it then to blow up first, and then you can get on the kind of blow up very easily after the fact. You don't need to try preempting it. At the moment, I don't see why the AI bubble would pop soon. The earnings are going to continue to come strong. It looks like third quarter earnings will be very positive, which we'll get next month, which means the very earliest that we'll see the AI bubble pop is fourth quarter earnings that we're going to get at the start of next year. And it may not even be then. So I think it's more likely that something else derails, or some kind of curveball or black swan, rather than the AI bubble popping. That's just an overvalued market that will crash a long way if we get a negative catalyst, but not the reason to be negative.
Can we have an expected black swan? What kind of black swans are we thinking about?
I mean, the whole point of a black swan is we're not anticipating it. But obviously, given the administration in the US and their willingness to jump in unprecedented ways across all policy fields, you'd have to assume that's the location where some kind of black swan might come from markets. But by definition, no, I have no anticipated black swan. I don't know what it is.
Mark, coming back to Oliver's interviews there, we've got oil up, but DAX futures down. Do we care about geopolitics? Thanos earlier was telling us that it's a tailwind.
I think we really do care, and I think this is a potential massive shift. But as Ollie made clear there, ultimately many people are saying, show us the money. Let's see whether these words, this sudden, seem to be quite a large shift in attitude from the US administration towards Russia, is backed up by actions over the coming months. And I really think there's a lot of vagueness right now. I think if we do suddenly have a shift, there's two things. I think the initial takeaway, hey, this is positive. Europe and US are working together. They're aligned. NATO is re-enthused. This is good. On the flip side, a slightly more negative interpretation would say that if US is going to get hawkish in Russia, this makes the idea of a bigger conflict even more likely. So I'm not sure this is an unmitigated positive. I think it's quite a nuanced issue, but certainly geopolitics will matter if the US administration backs up words with actions.
All right, Mark Cudmore, we thank you, our Bloomberg Markets Live executive editor. And you can remember to get up-to-date analysis and insight from Mark and his team by going to MLIV Go on your terminal. Let's get your stocks to watch now with Chloe Melly. And it's Chloe, defence in focus.
Lizzy. Good morning, Lizzie. Let's start with defence stocks today after Trump said that NATO nations should be shooting down Russian aircraft that violate their airspace. Trump also said that Ukraine should be able to fight back and win back all of its territory in its original form. So that is a much more sympathetic and positive statement that he has made previously on Ukraine's chances of winning the war. So this could lead to some positive movements in some of the key defence names in Europe this morning. So obviously Rheinmetall, the biggest one in Germany, but let's also keep an eye on BAE in the UK, Leonardo in Italy and Thales in France, just to name a few. They've obviously been having a really good year so far, so we'll see how those Trump remarks really move the needle. Moving on to chip makers, and we could see some positive movement there as well after Micron Technology, the largest US maker of computer memory chips, provided a really upbeat outlook thanks to strong AI demand. So let's see how that translates into the shares of some key suppliers, so ASML, Siltronic and BE Semi, for example. So ASML, for example, takes 7% of its revenue from Micron. So this is really not a negligible customer. So we'll see how the market reacts to that this morning. And finally, let's end on chocolate. So we could look at some movements in Lindt and Barry Callebaut because the cocoa crunch is easing. There is a sense that the harvest is getting better, and there's slowing demand as well. So this is potentially boosting the shares in those two companies this morning.
Thank you, Chloe. Our equities reporter Chloe Melly with chocolate on her mind this morning. We'll be back with the market open. This is Bloomberg.
Wednesday morning, good morning. Quick weather update. This is a live shot from Shenzhen. As you can see, we've got a super typhoon coming through. Shenzhen, I think, is probably next on the list. The effect is already fairly clear. When you've got palm trees being blown sideways, you always know that it's worth paying attention to. Anyway, it's having a little effect on the markets overnight out of Asia into Europe this morning, but certainly one to watch as we work our way through the rest of the day. In terms of the picture from yesterday into today from the United States, as you can see, actually we sold off towards the back end of the US session yesterday. There were some fairly spectacular moves, though, that we've seen over the last 30 days in names like Micron and Alibaba, and just the story, the fact that they were able to kind of not sell off on the back of their earnings and the numbers that we saw from Baba, I just thought was absolutely amazing. So yes, Europe sold off into the close yesterday. It's probably a little bit to price in on the downside, Lizzy Burden, into your futures, but where we go from there, I think will be interesting.
I like you as the weatherman, Guy. Let me continue that theme. We've got the winds blowing in from the US session yesterday, retreating on Wall Street, and we're red across the screen this morning for European futures. That's perhaps a surprise when it comes to the DAX, given that we're expecting a boost from the defence names, Anna, but we're down 0.2% as we go into the open.
Yeah, we'll certainly watch the defence sector. Lizzie, let's have a think about some of the individual stocks and sectors that could be on the move then. Defence could be in focus. We have seen at the margin perhaps a little more the language of interest to the defence sector from President Trump coming to us from Washington, from those meetings there in response to questions about what Europe should do if they see Russian jets in the airspace. All of that could have an impact on defence stocks. Chips in focus on the back of those Micron numbers that Guy was talking about, and Volvo Car, that company in focus as a result of their plan to try and offset some of the tariff impact by ramping up production in the US, Guy.
OK, here we go. Wednesday morning session. Let's take a look at what we've got coming through here in Europe. Keep an eye on the defence names. I think the tech space is going to be interesting. Keep an eye on that, certainly out of Asia into Europe. FTSE 100, not a firm focus of all of this. You may see names like BAE Systems on the move today. This as we talk of shooting down Russian jets in NATO airspace. That's alarming. Will we see that alarm being transferred into some of these names this morning in the European defence arena, which has done so well of late? So the FTSE 100 now just giving up that early green. The IBEX is out. out absolutely flat as a pancake as well. I keep saying that these days, but it does seem as the session develops, we do get a little bit more traction. CAC's not doing anything in a hurry. I feel that the index level story is not the story this morning. We've talked about this all morning. We are starting to see some of the defence names move. Lizzie, what are you seeing on the sector story?
Well, we've got about 3/4 of sectors in positive territory this morning. Excuse me. It's now changed. It's just 3/4 in negative territory this morning. So autos at the bottom of the basket, down 0.7%. You've got consumer products and services not far behind. Top of the basket, though, we have telecoms, and also just behind that, utilities, food, beverages and tobacco as well. But, of course, as you say, we've got this big focus on defence this morning. We're waiting for Metal to open, but Saab, Leonardo, both up over 2%. Saab actually up more than 3% now. BAE Systems, you did mention, up 1.6%, and Hensoldt enjoying these gains, up 2.5%, Anna, at the start of the session.
Of course, this is part of the industrial goods and services basket. So you see the upside now, Saab up by more than 3%. The upside is in there. It's sort of being offset by the other parts of that wider basket. And so that whole sector trades pretty flat. But it is defence names that are moving us a little bit higher. On the back of that, the commentary from President Trump was that an endorsement that NATO would have the US's blessing to go ahead and act against Russian aircraft in NATO skies. That seems to be the way that the market, at least at the margin, is interpreting it. But broadly speaking, we are more sectors in negative territory than in positive, which is interesting because we look ahead to US futures, which are ticking higher.
Absolutely. And what is it going to be that drives the US a little bit later on? Mixed messages from Powell yesterday. I'm not sure that the macro picture is the narrative. Micron's numbers, though. Micron is up massively over the last 30 days, and to hold that through the numbers after such a big move, I thought was absolutely amazing yesterday. The fact that they blew past expectations, were able to hold those gains. Bar overnight as well has been super strong, so the tech trade feels like it's still on this morning.
Well, let's get an expert view on the US equity picture. Laurie Calvasina, head of US equity strategy over at RBC Capital Markets, joins us around the desk now. Good morning to you, Laurie.
Good morning. Thanks for having me.
So on this debate that we keep having around the desk morning after morning, what is it that's driving the US stock rally? Is it AI, to Guy's point? Is it the Fed? And if the Fed doesn't cut as much as expected, does it stop?
Well, I think that's a great question. And, you know, if I go back to May, right, June, I was hearing Fed cuts are coming, Fed cuts are coming. So as we've kind of gotten to the cut, finally, you know, frankly, it has been a little bit of a surprise to me. We've been as strong as we have after that meeting. But I do think a lot of that is already baked into the price. And when I talk to my rate strategist, one of the things he says is, look, you know, we've kind of adjusted the timing on when those cuts are coming, but we've been saying 3% for terminal. A lot of other rate strategists have been saying 3% for terminal. So kind of what really changed in terms of overall street forecasts? You know, have you just put in so many at this point? Are you going to kind of dial that down and you're sitting at these kind of peak-like valuations? Feels like the market is due for a breather in here. I've been saying that for a while and it hasn't happened. So to sort of see these geopolitical headlines, AI, you know, one day we get a favorable headline, another day we get a headline say, you know, this is all fluff and not really impacting the bottom lines. And it does seem to me that that AI thread is what's kind of guiding some of the price action when we have some of those weaker days. So maybe that's it, and we've all just been focused on the other stuff we shouldn't be paying attention to.
I mean, you're on the road a lot. What's the mood when you're talking to investors? Are they nervous? Are they thinking, get in on these dips if and when they come?
So I'll tell you, the last couple of weeks, I've been at a number of group events, and some of those have been kind of high net worth retail, and some of those have been hedge fund, and it's been kind of everything in between. What I'll tell you is that the conversations in a lot of those, we're all talking about the things we're worried about. I would say kind of the retail side of things have seemed, and this is high net worth retail, not necessarily sort of your kind of day trading retail, they seemed a little bit more cautious. But when I sort of think about like the institutions and the hedge funds, you know, the question is, what can stop this? I think people are having a hard time identifying the specific downside catalyst when this market has just kind of moved through everything that should take it down. And one of my colleagues, you know, we've done a bunch of these meetings together. Our derivative strategist, Amy Wu-Silverman, she likes to start these things out by saying, you know, if you think the market's going to be up between now and year end, raise your hand. And, you know, almost every hand goes up in the room, and then you still talk about all the things you're worried about.
Yeah. I feel like we've been in that phase for a while, though.
Yeah.
And it's interesting. I'd be interested to get what Amy's view is on kind of what do you do in terms of hedging around that. So maybe you can give us a view on that too. But you've got stocks like Micron up massive. Yeah. We've got to the phase where these things are going straight up.
Yeah.
Like it's not like this is a sort of gradual increment. These things over the Micron's up. This is Micron.
Yeah.
It's up 30% in the last 30. These are sensational numbers. Is it getting euphoric? Am I getting my Greenspan kind of lexicon out again in terms of kind of how to describe this market? How would you describe this market when you see moves like that?
Well, I'm not going to tell you. I wasn't too upset yesterday when I heard Chairman Powell said stocks are highly overvalued, or whatever the exact quote was. I don't want to misquote him, but that's something we've been seeing in the data. That if you look at say the Nasdaq 100 equal weighted or cap weighted, or S&P top 10 or S&P cap weighted, all the kind of workhorse indexes or slices you can find, we're just bumping up against these valuation highs, and the PEs aren't able to make new highs, even though the stocks are. So it tells me we're very earnings dependent in here. Look, if I go back to this last reporting season and we were sort of reading through all the transcripts, the AI story sounded fine if you were listening to the companies who were actually involved in the build. There was no hesitancy. There was no pullback. People are still building these things out. We can debate how impactful they are to productivity and earnings, but the builds are still happening. When you look at the fundamental stories for the rest of the market, you can use words like messy, squishy, they're muddling through, it's fine, it's not that bad, but it's nothing that's going to really generate a lot of excitement. And so the exciting part of the fundamental narrative is still that AI trade, and the valuations are limiting it somewhat, but then the earnings come and catch you up and push you up again on price.
Powell didn't quite go as far as irrational exuberance, but it's kind of maybe he's inching in that direction. When you talk to European investors, I can look at the numbers on my screen and I factor in a currency story. The S&P, if you're a dollar investor, great, up 13% so far this year. Nice. If you're a European investor in euros investing in the United States, we're down. You're down by 0.5% at the moment. Do you get a different... What is your advice to European investors?
So I think it is interesting when I talk to people who are outside of the U.S. or globally focused versus people who are just kind of running their U.S. portfolios and sitting in the U.S., you do hear very different things, right? So if you're talking to sort of your large cap portfolio manager who's maybe, I'm just making up a city, right, but sitting in Chicago or Minneapolis or somewhere like that, they're just focused on picking stocks, and there's a lot of noise. And so they do have to sort of debate this AI trade and how much you stay invested, but they're just looking at individual names. Is the economy going to be healthy or not? And they're kind of putting all the other stuff aside. When you talk to European investors, when you talk to Canadian investors who really know the U.S. quite well, stock by stock, but also think very big picture and macro, that's when you're debating more things about asset flows and geographical allocation and relative valuation. And, the reality is it's kind of a tug of war between the two. So I do think that international investor mindset is a headwind for the U.S. and maybe limits gains. But at the end of the day, you've still got all these stock pickers in the U.S. and the 401k money is coming in, and, a lot of this is programmatic flows, and they're putting money to work. And so when they see dislocations and dips, they're thinking about upgrading their portfolio. But it is a very different conversation outside the U.S.
Okay. And thinking about CapEx, we've nodded at this a little bit, Laurie, thinking about AI and the amount of money being spent on that particular theme right now. What do CapEx trends tell us at the moment? What interesting detail? I've been wondering if the CapEx that's spent on AI is crowding out all kinds of other CapEx. I mean, what do you see there?
So we actually, we put our weekly out normally on Mondays, and in this edition, we updated some charts on CapEx that we've been running. Now that we've got all the stats in final for 2Q, we can really see the real data. And so we look at a sleeve of the S&P, top 10, the S&P 500 as a whole, and then the S&P X the top 10. And if you look at S&P 500 CapEx, the growth rates are actually getting close to past highs. I'm not going to sit here and say it's definitely peaked, but you could be worried about that. If you look at the S&P X the top 10, you saw a little bit of growth in 2Q, saw a little bit in 1Q, so you're on the mend, you're headed in the right direction, but you're way below those peaks, and you're way below the S&P 500 as a whole. So I do think, those kind of engines of AI, the workhorses, they're doing a ton of CapEx, right, because of what their customers are demanding.
Yes.
When you're looking outside of it, it's been rather weak. Now, in the States, again, I go back to my May and June conversations as the one big, beautiful bill was being anticipated. I heard from one stock picker after another, especially those who focus on industrials, CapEx is coming, CapEx is coming. It was almost as prevalent as the Fed conversation. And it's about bonus depreciation, R&D expensing, and just various provisions in that bill. Companies aren't really talking about it all that much. So, the good news is ISM new orders has perked up a tiny bit, a little bit in positive territory. You're seeing CapEx headed in the right direction, even outside the AI trade. But companies are not, nearly as excited as the U.S.-based investors on all this CapEx that's supposed to be coming.
Right. So then, from what you said about where the CapEx is happening and where it isn't, does that mean we limit our expectations for how far through the broadening out of this trend we are?
So I'm threading a kind of a specific needle here, but what I've said is I think it's a show-me story, right? I've seen enough to say we have to keep an open mind, we have to be optimistic, but, is the market expectation on this outstripping, what I'm sort of seeing at the company level? I think it is. So I do think investors maybe need to dial down their expectations just a little bit. A lot of the good news, if it's coming, I do think is priced in. And we just have to see what companies are going to end up doing. In the One Big Beautiful Bill conversations, we saw a lot of, we need to think about this. We have to come back. And if you go back to 2018, one thing we noticed about overall CapEx growth was that it peaked in early 2018. So you saw a fierce ramp in 2017 in anticipation of that tax bill. There were other things going on as well in that one. But then you sort of had all this uncertainty from tariffs come in and sort of dampen the enthusiasm. I think companies are managing through better this time, so we might not need to be that pessimistic. But I do think this is a show-me story.
What's Amy saying about hedging then? Got the VIX at 16. What's she saying?
I think that the issue that keeps coming up is in the past, like when you've had these hedges, they just haven't worked, right? And so I think there's been, sort of a reticence, right, to kind of put on too much. I don't want to say too much for her, but I will say, we're sort of looking at things, maybe from slightly different lenses right now, right? Because there have been so many people in the market, who are concerned, right, that we're hitting these peak valuations, and sentiment was kind of lousy at the end of August. If you looked at the AAII survey, it kind of sunk like a stone. So she's always really valuable to me when she talks about the pain trade. And so is the pain trade, sort of perhaps higher because you have had a lot of pessimism that's come back in. I'm more in the camp of, my target for the end of the year is still 63.50. I'm looking for 7,100 middle of next year, kind of second half of next year, but I do think we have, some stuff to work through. So I'd say she and I are on slightly different sides, of the same coin right now, where she's maybe a little bit more worried about, continued appreciation, and I'm a little bit more worried about short-term digestion.
Oh, that's interesting. That's an interesting little development.
Yeah.
Nice to see you.
Good to see you,
Come
too.
back and see us anytime that you're in town. Be great to see you. Laurie Calvasina, Head of US Equity Strategy, joining us from RBC Capital Markets. Call 6 looks like this. Let's look at some of the defence names. Probably got Rheinmetall on here. It is up, as you can see, circa 2% this morning. ASML is also on the front foot as well, so the tech trade is on weakness in luxury. The pharma trade is also giving back some ground, but the story this morning is about defence. Let's get some more detail on that story with Chloe Melling.
Good morning, guys. Yeah, let's start with defense. That is having a really good morning this morning after Trump said that NATO nations should be shooting down Russian jets that violate crossover into their airspace, and also said that with the help of the European Union, Ukraine should be able to win back all of its territory in its original form. So we can see some positive movements for Rheinmetall, BAE, Leonardo, Thales. We could only fit 4 on the board, but there's also some positive movements for Dassault Aviation, for Saab, for example, MTU Area, which provides engines as well to that defense sector. So it's a really positive morning for that industry. Moving on to the chip sector, where we see as well some positive movements as well, including in ASML and BE Semi, a little bit less so in Siltronic, and that is after Micron Technology, a US maker of computer memory chips, provided a very upbeat outlook, and that is thanks to really strong AI demand. ASML is one of the key suppliers to Micron, and therefore it is having a little bit of that read-across boost there, with shares up 0.7% and BE Semi 0.6% as well. Moving on to Bouygues, which is a French telecoms company. It was raised to an equal weight rating at Morgan Stanley, and that is driving the shares up 1.5% this morning. And finally, let's end on the chemicals sector, and we have Lanxess and Evonik, which are 2 chemicals companies that have been cut to a hold at Deutsche Bank, and that is driving the shares down this morning for those 2.
Chloe, thank you. Chloe Melling from our equities team, of course. Coming up, we'll turn to crypto. We'll have a conversation on that. We will also talk about defence companies. Some of these defence names, as Chloe was just pointing out, really doing well. Saab, in particular, up by more than 5% this morning on the back of what is being interpreted as more opportunity for defence names, perhaps to play a role in NATO and its defence of European skies. So we'll continue to watch these developments. This is Bloomberg.
Welcome back. You're watching the opening trade. The opening trade is now behind us. We're 18 minutes into the equity market session. Defence stocks are very much on the front foot. That is what is the big driver of European equity markets this morning. As you can see, some fairly big performances being put in. Saab's up really quite strongly. But you've also got Hensoldt up really strongly as well. This, as we hear from the US President, Donald Trump, saying that NATO members should shoot down any Russian aircraft that violate their airspace. Remember, we've already had drones shot down. Our manned aircraft next. The President struck a more sympathetic tone as well on Ukraine's chances of winning the war. This after meeting with Volodymyr Zelensky at the United Nations General Assembly. For more, we're joined on all of this by Jerry Doyle, our global defence editor, who is joining us out of Berlin. What are these latest comments, do you think, by Trump on A, the possibility of shooting down Russian aircraft, and B, on the fact that actually you could see a complete victory for the Ukrainians in this conflict? What do they mean, do you think, for European defence names?
Well, they could mean any number of things. Obviously, if Ukraine is expected to push back and retake all of their territory, that's a tremendous undertaking that's going to require a lot of material, a lot of manpower, a lot of ammunition, all of these things which would largely flow from European companies. And then on the air side, shooting down Russian jets, it's hard to say what kind of a reaction there might be to that, what kind of follow-on there might be. Obviously, Turkey in 2015 shot down Russian jets without any reprisals at all, so that might not spark any kind of wider conflict. But you can definitely see how things like air defense systems and air-to-air missiles might also, become into stronger demand if that sort of a scenario materializes.
Yes, and Jerry, when we look at the names that are doing well this morning, that are trading higher this morning, some of them in the defence space up by more than 4%, does that tell us something about what Ukraine might need most urgently and who's going to provide it?
It can say some things. Companies like Saab do provide these sort of high-tech air defense solutions and air-to-air solutions. Obviously, fighter jet. Rheinmetall is deep into the artillery space and armor, both of which would be in high demand if a conflict in Ukraine sort of expanded or engendered more European involvement.
Jerry, we've got outperformance in particular for Saab. You mentioned it there. Is there any other reason why that could be happening? We've also got comments from Mark Carney this morning. Could that be factoring in?
Sure. Looking at Saab as a fighter jet solution for Canada, obviously that could help them with their Gripen jet. And also there's been a little talk in the last few days about the troubled FCAS consortium to build a sixth-generation fighter jet, sort of a German, French, and Spanish endeavor at the moment. But if France goes its own way, if Dassault sort of insists on terms that aren't really acceptable to the rest of the consortium, maybe other companies, other countries can get involved. Saab, obviously, a very well-regarded name in the aircraft space. So there's been some conversation on that in the last couple of days, and that might be helping their shares as well.
OK. Jerry, thank you so much. Jerry Doyle, Bloomberg's global defence editor. We thank you for that analysis. We are looking at industrial goods and services, actually kind of in the middle of the basket right now, down 0.2% still. DAX shares down 0.3%. But as we say, these defence names really outperforming this morning. Let's turn now to crypto. Tether is said to be in talks with investors to raise as much as $20 billion. Bloomberg has learned that the crypto giant, who is the issuer of the world's largest stablecoin, is seeking the funds for a roughly 3% stake through a private placement. Bloomberg's senior editor for crypto, Ryan Weeks, joins us now for more. Good morning, Ryan. Just talk us through the details on this fundraising deal.
Good morning. Thanks for having me. I'd like to just quickly apologise for the state of my forehead. I had a procedure yesterday, which certainly made getting this story out interesting. The details, yes. So Tether, as you say, the largest stablecoin issuer in the world, trying to raise $20 billion, up to $20 billion. At a valuation of 500 billion or more. Still very much, the deal is still very much under discussion. Investors have been given access to a data room in the past couple of weeks. They're looking to sell a 3% stake through a private placement, and our sources have suggested that there'll be no secondary share selling as part of the deal. And a final point is that Cantor Fitzgerald, the investment bank with whom Tether has very close ties, they're the lead advisor on the deal.
In terms of how we get to the maths, walk us through how we get to the valuations that we're talking about here.
Yeah, so it's certainly a very eye-catching number. Whether or not they achieve it remains to be seen. I think what people in, on Tether's side will be trying to present to prospective investors on the deal is probably a comparison between them and their closest rival, Circle, which issues USDC. USDC is the second largest stablecoin. It has a market value of about 70 billion compared with Tether's 170 billion. That's one metric they'll be looking at. Another is profitability. So Tether isn't subject to sort of full audits, but it publishes regular disclosures. And the most recent of those showed that it made $5 billion in the latest quarter. In 2024, I believe it made $13 billion. If you compare that to Circle's performance in the same period, and Circle is now a public company, I believe Circle made something like $155 million or something. So, if you just look at a multiple there, it's something like 80 times as much profit that Tether made. And their CEO very recently tweeted, we have a 99% profit margin, which, ruffled some feathers in the crypto space because it's not necessarily for everyone what crypto is about, but you get there a sense of just how profitable an operation it is. It's very lean as well, only a couple of hundred people.
Right, and if this valuation, were confirmed, obviously it puts it in some very elevated circles when it comes to private companies. Incredible valuation then that could be achieved. So how did this, briefly, Ryan, how did this crypto firm manage to secure such a prominent spot in the stablecoin world?
Yeah, so it was one of the earliest stablecoins, initially used very much as a conduit for traders to get in and out of crypto ecosystems, trading tokens. It's become over the years more and more used as a sort of hedge against inflation and for payments, which is how it was perhaps envisaged in the first place. It's definitely been used in numerous examples in illicit transactions and to skirt sanctions as well. What's interesting is, for that reason, it hasn't always had a warm reception in the US, the business. It's clashed with regulators there. But under Trump's administration, Tether's been getting much more of a foothold in the US. So it's recently announced the launch of a US-compliant stablecoin, and it hired a former White House crypto advisor, Bo Hines, to lead that effort. So yeah, that's what's its sort of trajectory over the years. It's definitely being more embraced in the US now.
Ryan, thank you very much. Bloomberg Senior Editor for Crypto in Asia, Ryan Weeks. We thank you for the update on Tether. Good day for Tether, good day for Saudi stocks as well.
Yeah, stocks rising at 5% in Saudi on the news that you could see these foreign ownership rules eased. So at the moment, you have rules that cap foreign ownership of listed companies in Saudi at 49%. They could be raising that limit. It would be one of the most dramatic moves yet in this push to revive the equity market. Interesting, you've got the bank stocks climbing a record 9% off the back of this, some of them up 10% off the back of this. And JP Morgan's analyst, Pankaj Gupta, writing, if they raise the limits from 49% to 100%, it would trigger more than $10 billion of potential inflows into the Saudi equity market. And so this is significant.
Yeah, and some of these would be active investment choices and some of them just the passive flows.
Yeah, exactly. Well, so those major moves happening over on the Tether wall. But coming up on this programme, we're going to check in on the tech-driven market rally and the role private markets have in funding the AI boom with Dom Rizzo, portfolio manager over at T. Rowe Price. That conversation next. This is Bloomberg. This is the opening trade. We're 30 minutes into today's session, and as you can see, it is red across the screen. Even though you've had Donald Trump talking more tough words when it comes to Russia, even though we've seen outperformance for some of the big defence names, we're still seeing the DAX down 0.4%. It's the same story across Europe. We're catching up to yesterday's US session when Chair Powell didn't give any fuel to that fire of hopes of Fed cuts, still sitting on the fence about what is coming on the rate path ahead. And so we continue to feel the pessimism here in Europe. Guy, what's under the hood?
He was a little concerned, though, about stock valuations, but we'll come on and have that conversation in just a moment. Let's talk about where we are in terms of the internals of European markets this morning. 164 up, 416 down. That tells you everything you need to know. There are more sellers than buyers. Stocks are a little softer this morning. Volume's actually all right this morning, which, again, is quite interesting. We started the week quite slowly on the volume front. We're picking up the pace a little bit. There are 52-week highs that are worth talking about. Let's show you what is going on. Saab, we've already mentioned it, up. The defence names are on the front foot this morning. Legrand is in the AI trade at the build-out phase. The Repsol story, we've got Repsol up at a 52-week high, up by 0.5%. But the defence names are where really the action is once again. Ivanik is one of the 52-week lows. I think that's a downgrade this morning. Givaudan, fragrances and flavours and all that good stuff, also at a low, which I think is interesting, down by 0.6%. And Alcon in the eyewear space as well, down by around 1.5%. So a little bit of distribution in the market this morning, ups and downs. We haven't had that many 52-week lows recently. They're beginning to pick up a little bit now in the European space, Anna.
Yep, let's get an update on our top stories this morning, and we start with some geopolitics. Donald Trump says NATO countries should shoot down Russian jets if they violate their airspace. And in a change of tone, the US president says Ukraine can win back all territory occupied by Russia. Before meeting President Zelensky, Trump renewed his call for European nations to further halt imports of Russian oil and gas. Super Typhoon Ragasa has made landfall in Hong Kong and is set to cross China's southern coast today. Ragasa is the worst cyclone worldwide this year, and authorities in Taiwan say it killed 14 people on Tuesday as it struck the island. The Central Emergency Operations Centre says another 34 people were injured, with 124 reported missing. And the crypto giant Tether is said to be in talks with investors to raise as much as $20 billion. Sources say the firm is seeking the funds for a roughly 3% stake through a private placement. That could value the issuer of the world's largest stablecoin at around $500 billion. Lizzie.
Well, those are our headlines this morning. I want to remind everyone of our conversation that we had yesterday. The tech-led equities rally and the race to build out AI data centre infrastructure is going to need backing from private markets to meet demand. Just take a listen to what Marathon Asset Management CEO and Chair Bruce Richards had to say on that.
In the United States, we think the expenditure in the data centre area is around $3 trillion need in the next 4 years. Yep. Half of that is equity, and about half of that will come from, lending and leases and the debt markets.
Yep. Bruce, super positive on the AI trade. It's going to be profitable one way or the other. The build-out over the next few years is going to be absolutely massive. A lot of that money is going to be debt-financed. A lot of that is going to come from private credit. For more on where we go next and the rally that we are seeing, we're joined in the studio by Dom Rizzo, portfolio manager at T. Rowe Price, specialises in this space, tech space. Good morning.
Thanks for having me.
You. Look, we're getting into some interesting territory now. Some of these tech names are starting to really accelerate to the upside. When I see days of Oracle going up like 30% on a session, when I've got big names moving up 20, 30, 40% over the last month, and we saw that in the chip space yesterday, just going to the top of the NASDAQ, you look at Micron's up 41% in the last 30 days. Where are we in the kind of the blowing up of this tech bubble?
Yeah. Well, first off, thanks for having me, guys.
Nice to see you.
Look, I've been saying for a while, AI has the potential to be the biggest productivity enhancer for the global economy since electricity.
Right.
And productivity-enhancing technologies come with speculative bubbles, right? Go study history. We're right here in London. The railroad mania of 1840. Yep. Productivity-enhancing technology came with speculative bubbles. When we look forward, electricity added 1% a year to global GDP growth for 32 years straight. There's only 3 ways to grow an economy: capital, labor, and productivity. Yep. Capital's probably flat to down. Labor's probably down. All growth's going to come from productivity, which means a lot of the future growth in the world is going to come from AI. Now, we're clearly entering that second phase of the bubble as we see more debt financing, as we see more vendor financing. But I think fundamentals are very strong, and I actually think valuations today remain relatively reasonable.
Normally, though, to your point, you go through a kind of speculative phase, then you come down, and then you start to see maybe the effects of the technology starting to really manifest themselves in the wider economy. Is that how you think this is going to evolve as well? Are we going to see failures? Are we going to see investor money being destroyed here? how do you see this working? Is it just going to be a straight line, or are there going to be some bumps along the way?
Well, of course, there's going to be bumps along the way, right?
How big bumps?
They could be very big bumps, but every situation is different, right? So let's take a look at the internet versus AI.
Yeah.
Right. So how long did it take Internet Explorer to hit 100 million users?
Can't remember.
5 years. But yeah. 5 years.
Took me a while.
So it took OpenAI 2 months. Right? We sell nearly 1 billion smartphones a year. There's only 8 billion people on the planet. The proliferation of tech is so much faster today than at any other point in history.
Are people paying for it, though? How many people pay for OpenAI at the moment?
You know, it's actually, so the number of people who pay is quite small, but I actually think the way that OpenAI is going to end up being the fastest company ever to $100 billion of revenue doesn't necessarily come through the consumer subscription business. It may come through the consumer advertising business.
Right.
So, you know, OpenAI knows everything about me. It knows my kids' names. It knows my blood pressure. It knows that I'm the portfolio manager for the global technology.
How's the blood pressure right now?
You know, right now it's pretty good. But let's see what happens with the stock
On the other
moves.
side of that bubble, we'll find out.
Yeah, exactly.
But what about power? Is there enough power to power all of these data centers? Is that the ultimate bottleneck to all of this?
So over the medium to long term, power is clearly the bottleneck. The one thing I would say about power is, in some ways, it's the ultimate commodity. You can, you know, we'll build more power. That's what we do. We're very good at it. So people who are saying power is the next part of the AI trade, I'm actually a little skeptical of that. I remain in the camp that the best way to invest in the AI trade is through the AI semis, as we go from a $45 billion chip market in 2023 to a $500 billion AI chip market in 2028 to a $1 trillion AI chip market in 2030.
I was interested as well, you mentioned hardware.
Yeah.
You've got this news this morning that Alibaba is going to pair up with NVIDIA, physical AI software collaboration to start. Where do you see this going when AI is integrated? What's the kind of iPhone moment when it gets to AI?
Well, so I think there's kind of 3 phases of AI. So the first is co-pilots, right? And so what is a co-pilot? Humans are in the loop. You're helping the co-pilot get to the answer. The second is agentic AI, when you can go tell the AI to go do a task on your behalf and you don't have to be in the loop to make it work. The third is physical AI, right? Autonomous robots, driving, and you know, humanoids. I think we're a little bit away from that physical AI really impacting the global economy. That's probably a 28, 29, 30 impact. I mean, I do use full self-driving every day in America, and it is incredible. But in terms of actually moving the productivity statistics of the global economy, I still think we have a little ways to go on physical AI. On Alibaba, we were just in China 3 months ago. And a couple of great insights we had from that trip. So first was that their core e-commerce business was going to accelerate. You know, they had a really strong positioning in quick service delivery with their Ellie May, and they were taking material share from Meituan. And then second, and probably most importantly for the stock, is that of all the different cloud vendors, of all the different players in China, Alibaba remains the best positioned to help enterprises and corporates in China deliver AI. And why is that? So first, they have the biggest data center footprint in China itself. But second, they have great open source AI with their Quen models. And then third, we're going to see what's going to happen with these chip tariffs and trade war conversations between the U.S. and China. But I think ultimately, the most natural outcome is that NVIDIA and AMD will be able to sell in China, and I think Alibaba will probably be the largest procurer of those chips over time.
Okay, yes, and the extent to which that relationship is allowed to flourish will be interesting. Tell us a lot about the way these countries will deal with each other. So you mentioned these different stages of AI. Then, Dominic, you were talking about co-pilots, and then you get agentic, and then you get robots. What are you watching to tell you what is really delivering productivity benefits for business? Because at the moment we're in that push out, that rollout of all of that capital expenditure. We're hopeful. We cross our fingers. We hope it delivers some productivity gains. What tells you that it really is working for the businesses that are spending the money on it?
Well, I'm seeing it day to day in my day-to-day workflow, right? So we use ChatGPT Enterprise in our organization. If I get questions coming in externally, I'll run them through my own Rizzo on Tech GPT that I've trained on my media appearances and on my internal notes. And we have notes going all the way back to the 90s on many of our companies. So that's a really exciting thing. But I think we're going to see it across finance, legal, HR. Every single white-collar workflow is going to be enhanced productivity by AI. I mean, the thing that I'm looking the most at, and what's the biggest risk to the overall AI trade, it comes down to one thing. Do the scaling laws continue? right? And so what are the scaling laws? For every 10x amount of compute you throw at the problem, the AI gets 2x smarter. And so why was GPT 3.5 through ChatGPT such a hit? It was really the first AI algorithm that passed the Turing test. It really felt like you were talking to a person. Remember that first time you talked to ChatGPT?
I know others don't think we've passed the Turing test yet.
Well, it had roughly an IQ of 100, right, depending, 100, 110, whatever. If you throw 10x the amount of compute at the problem and you can double that IQ, then we're starting to talk artificial general intelligence, AGI, right? An AI that's smarter than the smartest humans. And I think we're on that path, and I think that's why these companies are investing so heavily, like the OpenAI deal that we saw with NVIDIA.
And you think that companies will be able to charge for the stuff? Eventually businesses are going to be the ones who'll pay for it?
I think right now maybe the biggest consumer surplus in the market in the world, right? If we think about consumer surplus, how much are you charging relative to how much value that you're delivering? It may be ChatGPT.
Let's come back to the power question. I was talking to Richard Windsor about this, who comes on the show fairly often. His line is it's basically one big reactor, nuclear reactor, for every gigawatt that we build. That's a lot of nuclear reactors that we're talking about at the moment. This throttling factor of electrons, when do you start to see that manifesting itself? Because there's day by day at the moment I'm hearing we're going to build this, and OpenAI has been out doing it again overnight. We're going to build even more. It's going to be in the States this time. I don't see the States building 5, 6, 10 new nuclear reactors anytime soon. I think they've got 50 in total right now. The number's going to have to go up an awful lot. Trump doesn't like green. We're going to have to go down the fossil fuel route if we're not going. Where did the electrons come from?
How are we going to do this? So a couple things. So number one, we're very lucky in the U.S. We actually have a lot of brownfield capacity. So you can turn around, you can repurpose some of the old coal plants with natural gas, or eventually small modular reactors, SMRs. But I think that's a while ago.
Does this happen?
Oh, I think we're starting to see it already. So look at what XAI has done. Right, they've repurposed old factories, right, that had direct natural gas lines. I think we're going to have plenty of electrons. It's going to take time to build it out, but the key is that these companies are able to put the power factories right next to the data centers, and they don't have to go through the electric utilities in the U.S. right now. And if we look at those numbers coming out of OpenAI, they're staggering, right? 10 gigawatts. Let's just put some numbers around that. This NVIDIA deal that we saw, 10 gigawatts. Johnson in the past has said that each gigawatt is roughly $45 billion to $55 billion of total spend. So let's say that's $500 billion. And for NVIDIA, it's probably an addressable market of $35 billion of gigawatts. So per gigawatt, so that's $350 billion addressable market. If this is truly incremental, like the company has been saying, that's a $200 billion incremental revenue opportunity for the company. That probably comes at a 50% incremental net margin. That's $100 billion at incremental net income. And then you get equity in OpenAI on top, which is the most valuable private startup in the world, rumored to be $500 billion valuation last time. So I look at it and I say, look, that deal looks pretty good to me. I think we're going to have the power. Let's see what ends up happening, but I think fundamentals remain very strong.
Others would say that that's circular, that it's bubble-like behaviour, that they're just propping up the market.
If you go back, the circular reference in the Excel data, right, in the Excel model, and look at the internet bubble, that definitely started happening in '97. So again, our job is to navigate speculative bubbles responsibly for our clients. We do that through our framework, linchpin technologies, innovating in secular growth markets with improvable fundamentals at reasonable valuations, and we're trying to capture the upside and blunt the downside.
So you think we're at 97?
I don't want to put a date on it, but I feel pretty good about the current setup.
All right. His heart rate's okay.
Heart rate's good.
Blood pressure's looking pretty good.
Well, we have the order.
The self-driving car, though, does your blood pressure go up and down with that?
My wife says it's a better driver than me. So.
Tom.
No comment. No, we've never seen you drive, Tom.
Tom Rizzo, portfolio manager at T. Rowe Price. My heart rate goes up at the open. Don't know about you. But coming up on the programme, Estonia's Prime Minister says that Russian incursions must stop. We get his comments about NATO next. This is Bloomberg.
Welcome back. This is the opening trade. Now, Estonia's Prime Minister says NATO will be ready to respond if Russian forces repeat a violation into the Baltic nations' airspace. Speaking with Bloomberg's Oliver Crook, Chris and Michal added that incursions are dangerous and must stop.
NATO is a collective organization, and all our allies, not in Estonia or in the case of Estonia, are always backing each other. And this was very visible in NATO Technical Council. It has been visible in direct contacts and press releases coming from different sides. So NATO's members are backing each other up. Not only with words, but also with the capabilities, as already mentioned, that different capabilities come from our allies.
And following on to sort of the war in Ukraine, which is obviously the source of much of the issues that you're currently dealing with in your airspace, you said that the aim of the Russians is to draw attention and assistance away from Ukraine by forcing NATO to focus more on their own territories. How do you prevent that from happening and keeping the focus on Ukraine?
It's quite simple. The first thing is to reveal Russia's intent, because the Russia's intent is quite obvious that all the NATO's members should be concerned with their own borders and territories, not thinking about Ukraine. And the answer is quite simple. Stronger sanctions on Russia's shadow fleet, on energy, on banking, and also assistance to Ukraine. So these will be also part of response, asymmetrical response to Russia's steps.
And the EU says that they are hoping to ban the delivery of Russian LNG into the European Union by the end of next year. Is that too long? Is that too far away? Should they be banning that earlier? And should there be a more active conversation within Europe of banning Russian oil and pipeline gas that is still permitted to go into the European Union?
Quite frankly, to my taste, the sooner the better, because Estonian response has always been that the less fresh cash goes to Russia to wage the war against Ukraine, and also to have this kind of operations or stepping on the borders of NATO, the sooner it happens, the better. So our position is the sooner it happens, the better.
Chris and Michal, the Estonian Prime Minister speaking there. Now, the UN General Assembly continues today with Ukraine's President Zelensky expected to deliver his address just a day after meeting with Donald Trump. The US President said that Kyiv could take its land back from Russia and that NATO should shoot down Russian planes that violate their airspace. Let's get to Ollie Crook now, our Europe correspondent, who, of course, brought us that interview there. Ollie, we've had loads out of New York already on the war in Ukraine. What are you watching out for today?
Yeah, Lizzie, there's so much to unpack about really the last 24 hours. And I have to say, as somebody who is sometimes a bit skeptical of these meetings and really getting any sort of concrete outcomes, maybe not as skeptical as Donald Trump is himself of the United Nations, the last 24 hours have been absolutely loaded with activity, namely around this issue of Ukraine, where Donald Trump is basically sending a very strong signal, you know, the sort of literal details of which you may be able to doubt. Many of the European leaders will say, hey, listen, this is his opinion today. It may shift tomorrow. But the point is that he is sending a very strong signal, A, to the Ukrainians and B, to the Russians, that at this point he's tried going the sort of nice route with Vladimir Putin. It does not seem to be yielding the progress that he would like to see. And as a consequence, he's now going to go a lot harder. I think what I am now looking forward are the concrete details of where he's going to take that conversation. To what degree will he be acting more collectively with the sort of European allies as well? He has put a lot of things on the table over the last couple of weeks that have forced the Europeans to do things much more seriously, like banning the LNG that is still going from Russia into Europe a year earlier. That basically would not have happened were it not for the sort of pressure that was put on from Donald Trump. And I think another side of this that we don't think that much about, but I think is absolutely key, when you think about 7 months ago, the two men were sitting there in the same sort of chairs, same configuration, that horrible meeting in the Oval Office, the degree that that impacted Ukrainian morale for the people fighting, for the people within the country, to now have the United States speaking very, very vocally, very, very supportively, is going to be also just a massive support for the Ukrainians and puts a lot of pressure for the Europeans to put the money up in order to get that equipment, buy that hardware from the United States, which the United States is now saying it is going to sell to Europe. Again, this was in doubt all a few months ago. So this is an absolute key shift in the discussion around Ukraine. I think could have a very material impact on what this war looks like over the next few months.
And whether or not some of that technology is going to be used within Russia, I think is another key question that is increasingly being asked as well. I see this morning. Bloomberg's Europe correspondent, Ollie Crook, joining us out of Brussels this morning. What else are we going to be watching out for this morning? The EFO number will be dropping in around 7 minutes' time out of Germany. We'll get a taste of what investors are feeling about what the German situation looks like, what industry is looking like in Germany and how industry feels. Are we going to see some fiscal impulse beginning to creep into those numbers? Home sales out of the United States a little bit later on. We'll watch out for that one as well. We've also got Mary Daly out of San Francisco speaking a little bit later on today. What is Valerie Teitel watching? Plenty of Fed speak. It does continue. We've had lots already. Anything you're watching out for today?
So much Fed speak. I mean, my goodness, there was a lot in the last few days. I think the main takeaway from Powell's speech and everything that we've heard is that Powell is really positioning himself as neither a hawk or a dove at the moment, really in between these two camps, which is giving him a lot of flexibility to react to incoming data or any changes in the narrative. Yesterday, he repeated a lot of the same lines he used in the press conference, really nothing new. There was no guidance on an October cut, but I don't think the market really expected him to say anything. We haven't really gotten any new data to change the dial from when he spoke last Wednesday. But, you know, he's really solidly putting himself in the middle, because on one side you have the more hawkish members like Beth Hammack a few days ago saying she's laser focused on inflation and that she sees risks of the economy overheating if they cut too quickly. On the dovish side, Michal Bowman, the main dissenter at the decision 2 meetings ago, calling for a series of cuts and the fact that it could have to go faster if the labor market continues to deteriorate. And she thinks that there is a serious risk of the Fed falling behind the curve. So Powell using neither of those strong languages, still staying down the middle.
So what are we watching for today then, Valerie? Is it more Fed speak or the iPhone number that we were just referencing? It's interesting, actually. It's been the expectation number has been really rising through 2025, and you wonder how much of that is about the domestic spending story and how much of that is about the possibility of exporting more or sort of trying to turn that relationship around with the United States with a trade deal.
Look, I don't want to keep bringing up AI because I know you guys have talked a lot about it in the last 2 hours. But honestly, even for Fed policy, I think the continued narrative out of AI is starting to mean
and it doesn't
something.
get as much reference from monetary policy types as you might expect it to.
There has been some debate on what AI has done to the neutral rate, the fact that maybe it's drawing investment away into less labor-intensive areas of the economy. But essentially, if there is going to be an argument for why perhaps the Fed is just going to cut once and then be done with it, it would be that this reacceleration of AI spending is really causing them to rethink on whether the U.S. economy is slowing down. Yes, the labor market is going through a lot of flux, but it's going through a lot of flux for reasons like immigration and demographics switching. You know, if this AI boom really is the counter to that labor market slowing, you could see perhaps the Fed not cutting those remaining 2 reductions they had on the dot plot.
All right, we keep an eye on that. Bloomberg's Valerie Teitel, thank you so much for your analysis. That's it for the opening trade. The pulse is up next, the EFO number as well. This is Bloomberg.